You are listening to ChartingWealth.com for Friday, the 18th of September, 2015. Let's jump right into it. We are looking at IYY. What is IYY? Well, it's the total market. It's an index fund, an exchange-traded fund that follows the total market. What do we see going on? Well, here's the big dip that happened on our two-day chart back on the 24th of August. And has the market recovered up to that point? No, it has not. It is not at all. In fact, if we drop back to our 4-hour chart, you can see that because of the news of the Fed today that they will not be increasing the interest rates, which are about zero right now, that the market did move up. It moved through the self-imposed limit that the market had set on itself, and it is continuing the up move from the crossover on the moving average convergence divergence back on the 27th. We continue to see that up move in the market, although it's not much of an up move, but it continues to move up, not totally unexpected from the Fed. Of course, the Fed tells us because of the global financial turmoil, they're not going to be reducing the interest rates, increasing the interest rates at this time. Now, let's go to the SPY. Technically, the IYY was down 0.20% today. If we go to the two-day chart and check out the SPY, which was technically down 0.22%, we see that it's barely pushing through the ceiling that the market had held itself to over the last couple of weeks. Again, it's barely pushed through that. It did cross over on the two-day chart on the last 2 days, about a day and a half or so ago. And if we go to the 4-hour chart, we see a little bit better that the market crossed over again about the same time the total market did back on the 27th. It's continued to push up, pushed through over the last day, barely through the self-imposed limit around $200 or so on the SPY, which of course is the Standard & Poor's 500. Now, what is happening with the Qs? That is the NASDAQ 100, our technology stocks in the U.S. We see that it also pushed through the past self-imposed ceiling just barely, crossed over going up on the two-day chart back on the candle for the 15th, and we can see if we drop back to the 4-hour chart that we've risen above that. Again, we've got a crossover that occurred back on the 27th about the same time. The market slid sideways for quite a while and has drifted up over the last couple of days, expecting what happened with the Fed today. Now again, this up move is very long in the tooth. We want to see how that shakes out over the next couple of days in the total market, particularly, let's see how it goes on this Friday and the following Monday. Now let's look at what gold has done. This is what's curious. Even with the market moving up, what has gold done? Now gold has typically, as the market moves up, gold has gone down. What has gold done? Gold has gone up. It crossed through, and let's go back to the two-day chart. Gold has crossed over on the two-day chart going up back after the 15th. It broke a good strong two-day trend line that had lasted 8 days, and we don't quite have the derivative oscillator crossing over yet, but the moving average convergence divergence has crossed over. And if we go to the 4-hour chart, you can see over the past 2 days it crossed over in the afternoon of the 16th, and it's continued to move up. Now that is indeed interesting as to where the indexes may go. That is the total market, the S&P 500 and the NASDAQ 100. If gold is continuing to move up, typically that signals that the indexes will go down. So maybe those up moves in the indexes will be very short-lived. And again, our 4-hour chart has been very indicative of a good quantifier of which way gold is moving. When it crossed over going down back on the 25th of August, gold did move down fairly rapidly and fairly accurately, and now it's crossed over around the 16th, moving up. And again, gold typically goes up in this market when the market goes down. So watch the market. See if it's going to sustain these up moves or if it's going to move over and roll down. That's where we are. Hope that you've had a great week of trading, or at least you've been waiting to see what the Federal Reserve would do. Please join us every day for chartingwealth.com. Follow us on Facebook and Twitter, also on Instagram. Wish you the best in the markets. Make sure that you listen to our weekly review and forecast that will be put out sometime Friday or Saturday, and you can get it for Monday to help you plan your week. And we'd love you to sign up for our email newsletter that we send out every day the markets are open. Thank you again for listening to chartingwealth.com.